Wonderful. I think we are live. Let me just double check and make sure that everything with the stream is working okay. Then I'm sure we'll have some people tuning in a moment. Yes. Perfect. Yeah, it seems to be working. I'm just going to share it in the Discord so that lots of people can start tuning in. Okay, people are tuning in now. Hello. Welcome, everyone. Welcome back. We're back with another Friday. It's the weekly Vol. We're here to have fun. Today, we're going to talk about all things related to options and markets with none other than the Panoptic team. Super excited for this one because I think, like IVX, Panoptic have been building for a long, long time. They've got a live product now as well, so we'll definitely go into that. We'll talk a little bit about what's going on in the market and possibly some different strategies as well. So yeah, hello guys. I see lots of you tuning in already. Welcome everyone, and glad to have you on Friday. But first of all, let's introduce our guest today. We've got the founder of Panoptic here. So yeah, pleasure to have you here today, sir.
Yeah, hey, Wash, how are you? Thanks for inviting me.
No, it's a real pleasure, and I think Panoptic's something that I and Bob have been following for a long, long time, and yeah, I think it comes from this era of like these new generation of option protocols with the likes of yourselves, but also the likes of like GammaSwap, who we recently had on the show as well. And I think it's great to finally see these products out and live now. It's been a few years, and yeah, we're all really excited for it. So.
Yeah, we are. We've been building for so long. This is a huge undertaking. Again, trying to do anything on chain is difficult. Doing options is doubly so. You have so many moving parts, so many things to worry about. It's leveraged product. It's Oracle free. It's permissionless. So we're combining pretty much everything that exists and trying to shove it into a single contract. So we're extremely proud of the result. And again, we launched in December. We were able to see the growth. This is all organic, so we have a point system, but we will release the details. So those that have been using it are doing it a bit in the dark, but then they do it because they want to trade options, and this is exactly what we want to seek and get feedback from these users. But yeah, more than happy to talk to you today and then discuss Panoptic.
Yeah, absolutely. I think we'll definitely get into Panoptic in a moment. I think, one thing that we always like to do on the show is, first of all, talk about what's happening in the market at the moment. So, I mean, I'll just pull up, maybe we can kind of have a look at this together as well and see kind of what's been going on. But I think actually the market in general has been looking pretty good, and it surprised me a little bit. Over the last couple of weeks, we've talked about kind of some of the things that have been happening, whether it's, the news that we had from Jerome Powell about the reduction in potential rate cuts. Possibly some people front running the Trump inauguration, and perhaps some people even just taking profits after we've had such a great Q4. I'd love to first of all ask you directly, like, how do you like to personally trade markets? And again, just out of interest, are you someone who likes to buy spot, or like how do you like to use derivatives as well, like when it comes to your personal investment but also trading experience?
Yeah, so in TradFi, I'm 100% options focused.
Uh-huh.
Spot is actually a bit boring for me. You buy and hold, and then you can short, but it's kind of complex. Even in the US, you have to ask permission to short, and then you buy and hold, or like hold and pray. That doesn't go down. So everything I do is options, and also on the sell side as well. So when I look at charts, I look at the volatility chart. The price is not as
Important.
as much as my focus. And then we can talk about the current environment. It has some interesting patterns that, again, as an options trader, you look at that could not be at all what you look at as a spot trader. But I'm 100% invested in selling options, selling mostly puts and calls or strangles, but always kind of on the sell side. So that choppiness you see that the lines, the key points that it's actually not moving too much. It's reverting and staying in within range. This is what I like as a trader. I like to see violent moves, but also that it doesn't explode up to the right. So you see back and forths. This is definitely what a option trader is kind of like myself like. So again, without price going up, so this is not something I like to see because it's a bit unknown. When you see something that's a bit sideways, You can prepare for it. But when you're at the top, or when you're in a bull run or something that moves, then this is when the volatility kicks in. So, anyways, I'm always looking at the IV signals, whether it's IV itself, IV percentile, IV rank. When we do it now, I can do it on Panoptic. I do it with liquidity distribution where people are trading. So it's a lot more PVP and responding to the market, but on that option plane, if you want. It's a different way of trading for sure.
Interesting, interesting. So what happens then when the market does go into like price discovery? Let's say like what happened with Bitcoin following the Trump news, it performed really, really well. How do you kind of position in those circumstances?
Yeah. So the current state when we launched Panoptic, this is about when you had the Powell rate hike.
Yes.
Within 2 hours, it dropped. Maybe the next day, but within 2 hours, it dropped 5%, another 5%, and these moves typically means that you have to respond to it, but it's too late. They happen so fast. You're not on in front of your screen. You're not a MEV bot that runs something 24/7. So the best way you can manage these sudden moves, as you say, price discovery, you just have to not wait and see, but manage your risk.
Hmm.
And a lot of what typically happens is that you have some type of move, and maybe the December one, it moves, seems to be going one direction only, green candles. There's a reversion that you should expect. Those that wanted to buy are buying. Same thing when it goes down. Those that wanted to sell are selling. So this is when you enter the market. You wait for the top to stabilize a little bit, and maybe where you have your blue lines is where this is happening. But when this is seems stable, then you can actually enter into a position that says, okay, volatility has been so high, it can only go down. Price has been so up, I don't think it's going to go higher, so I'll be a bit neutral or maybe negative delta, meaning that I think the price is going to go down. And this is kind of how you respond. You just it's more reactive and a wait and see method once you set up your trade. So you can do this on 0DT level and do it several times a day. I do it on the weekly and monthly level and do it maybe a few times a week, and then I manage again once a day or more, or less often than that.
Very, very interesting. Very interesting. I wonder, how much time does it take for you to kind of figure out like these times to kind of enter these positions then? Because you're really waiting for the market to have some sort of reversion or like sideways action. I guess to be honest with you, most of the time the market is moving sideways as well. It's only very, very few occasions where we have explosive kind of growth upwards. Otherwise, I guess most of the time we are kind of range bound, and I guess most of these option strategies work really well in those kind of cases.
Exactly. And if you're selling options, the worst thing that can happen is these sudden price move that are very, very violent. And in that case, you have no way of eating the loss, closing your position with 50, 100, sometimes 200% loss, because you can lose more than you put in.
Yeah.
And that's kind of part of life. But yes, 80%, 85% of the time, it's sideways. It's a good environment. The 15 to 20% that it's moving, you want to be in a kind of risk off a little bit, still be in the market, but have the your whole portfolio exposed. But the key point is that you should also capitalize on these sudden moves. If you're 25% invested and you see a big move, maybe you lost a little bit, but now you can double down and kind of create a delta neutral strategy at the top, or maybe a negative delta strategy at the top, and ride the wave as it either cools down or goes down. It cools down in terms of volatility, or goes down in terms of price. So in TradFi, it's actually earnings season is extremely wild. Afterwards, it's much more quiet. You have these cycles as well. There's like books and methods and podcasts and YouTube videos describing this extremely well as to how you capitalize on these kind of either predictable events or unpredictable events. In the world of DeFi and options, it's a new world. No one has had enough time to do this, I guess, either on Panoptic or the options protocol. But it's a different playbook as well. Like meme coins are pure volatility. There's no earnings. There's actually no information. It's
Yep.
actually no alpha, no beta, nothing going on. It's pure 100% volatility. So that is a different trade than staked ETH, or even ETH itself, or even see the blue chip. So the whole thing is extremely interesting from the like option trader point of view for sure.
So that brings up another interesting question that I have on my side, which is so what sort of assets are you typically speculating with? I guess with options, especially both on chain and off chain, there isn't a wide variety that you can really choose from. Is it mostly kind of your majors like Bitcoin and Ethereum, or do you kind of dabble into some of the on chain assets as well?
Yeah. So the origin story of Panoptic is that I personally wanted to trade options on all assets, the same way that Uniswap makes you trade any, and you can launch assets yourself. But
Yeah,
once it's launched, no one stops you from trading.
yeah.
So Panoptic was built with the same model. So personally, what I do is mostly ETH because it's liquid,
Hmm.
but I will gladly go to all the meme coins. I have positions on a so the Cult coin, which is the Milady
Oh
meme
yes,
coin that they launched. There's Mog as well. That's a pool that exists. Even
yeah,
Bitcoin, the ticker Bitcoin, Harry Potter, Shiba Inu
yeah,
10.
yeah.
So you can trade those on Panoptic. The key point is that the volatility is extremely high. And this could be scary when you buy and hold. But when you're an options trader, there is a strategy that kind of capitalize on that high volatility, and you can cap your risk as well. So again, I think we'll go over the portfolio, but I have positions on Colt, on Wrapped II coin, which is a very, very under the radar meme coin as well. I was, and then the way that Panoptic works is that it's integrated into Uniswap, and it's on the LP side of Uniswap that you can trade options.
Hmm.
And in my over the past 3-4 years, I've been an LP or selling options on Shiba Inu, on a Pepe. All of the meme coins is where it's exciting to be because, as I said, it's pure volatility. It's actually much not easier, but it's a different type of trade that you see in even Bitcoin has the halving and stuff. So there's some events that can happen that can influence this. So yeah, I would say that my I get the most fun on these meme coins, but then most of my portfolio is still on these majors.
Ah, that's really really interesting to hear, and I think we've got quite a few hundred people who are tuning in already. How's it going, everyone? Welcome. I think that was super interesting to hear, like about kind of how you can actually use Panoptic. Not only just for trading your majors, but it's permissionless in the sense that anything that's listed on Uniswap can now be spun up into sophisticated option products, and they have all kinds of crazy payouts. You can go long, short, sideways, whatever you want. Mix them all up. That's the great thing about him. So okay, very very interesting. How do you think like the market is going to go like over the next like 3 to 6 months as well?
I mean, everything is priced in. I think so.
Mm,
Market is pretty efficient. The election result did create a move, but we're months past that, and whether the inauguration is also kind of priced in. So I would say that I would expect the vol to come down a little bit. People are expecting Trump to be extremely pro crypto, so that's why we had this press action. So unless he doesn't deliver or over delivers from what the market thinks, and this is again a little bit like earnings as well. If you have Nvidia earnings, actually, if I were to tell you the day before Nvidia's numbers, and you'd say, "All right, this is what they got. This is all the results," you know ahead of time, you won't be able to predict the price action. Sometimes
yeah,
going up, it's down. It's actually so random, and a million traders all have their own ideas. And I'd say this is the same thing with the inauguration and kind of the first few days of the Trump administration. I treat this as an earning seasons. Maybe someone knows, but even if you know, if you have certainly you're in Trump's ear, you won't even know where the market's going. It's going to go where it wants.
that's true.
So as a options trade, you can capitalize on that unexpected move. So you can buy straddles, or you can say, I know the price is going to move, but I don't know up or down. So I'm going to create a strategy that makes me money if it goes up by a lot, down by a lot, or maybe I lose a little bit if it stays put. So that's kind of one trade that people do or earnings that could be done over the next few weeks. But yeah, I'd say that the anyone's prediction is as good as any. My view is that vol is pretty high now. It's going to be a sudden move. After that, it's going to cool down.
Interesting, interesting, very, very interesting, and I think hopefully that gives some of the audience some insights as well. Bob has been able to come back as well, so I'd love to kind of first of all intro him to everyone today as well, and secondly, I'd love to know, like Bob, is there anything specifically that you've been trading over the last week that would be interesting? Maybe some certain strategies, LPing, maybe you're longing or shorting or using some interesting instruments for anything would be great to share. Let's see if we can you hear us? Maybe not. Maybe not. Okay, we'll see if Bob comes back in a bit. Okay, okay, fine. He's just messaged. He'll be back in a bit. Okay. So I mean, I've personally been enjoying the market a little bit as well. I think I've been doing a whole range of different strategies. LPing has always been something that I've loved to do, and I guess now when the market is kind of showcasing this volatility, I usually prefer to kind of not go for essentially shorting the vol. You know, I kind of want to have full exposure to the market, and I guess one of the ways to do that is through call options themselves. So I think that's been a really really interesting thing. Um, One thing that I thought would be really great to show is, let's see if I can pull this up. Um, this. I was just having a look on CoinGlass just to see kind of the volume that we're getting on Deribit, which was really, 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 really interesting. I don't know if you had a chance to see this, but a lot of volume on some of these call options, which are looking very, very bullish. Any thoughts or any comments that you can make on this?
Yeah, exactly. So this is, I mean, the one that has 1,300 Bitcoin open interest. This is the 120K call
Yeah.
expiring in March. So this is kind of 3 months out, kind of long shot. So the it's like, man, 20% out of the current price. And I usually talk about delta, but this looks to be like a, I don't know, perhaps a like 20-30 delta option, call option. So this is kind of, if I were bullish and if I want to use options, this is exactly the one I would buy. You don't want to be too close to the money. You'd see the second one is 105 end of month. It's kind of maybe also 25 to 30 delta, but this is extremely kind of, the market sentiment tells you they expect this to be way ahead, way higher than 120K, and that's kind of why we see this.
Mm.
Um, and then yeah, I'm looking down, but a lot of the one that expires tomorrow, 104. This is interesting as well. Uh, no, I think that the call option volume is there's a lot of call skew in the BTC options and ETH as well. People are bullish. They think the risk is on the upside, meaning that they think the price is going to go up quite high. Interesting. There's a 7,000 what? So there's a 7,000 strike call option on ETH
End of the month.
expiring in 2 weeks. So this is, someone is in the know. If the price more than doubles within the next 2 weeks, yes, a call option is a good way, but there's many other ways to capitalize. So all of this is that you have a lot of offshore interest. This is where people think the risk is. You think on the other side as well, people are buying options, but the sellers as well. They say, I'm okay with parting with my ETH, my Bitcoin. If it's a miner, you have some stash. You say, all right, I'm going to get some yield, sell a call. And if it does go above 120K, I'm okay. I'm going to get the premium and sell it on the way up. And that's kind of the two-sidedness of the market. So I'd say that it's extremely bullish in terms of what people think is going to happen. I wouldn't bet my house on 2.5x over the next 2 weeks on ETH. But otherwise, yeah, I think this is kind of definitely on the call skew side.
Yeah, it's very very interesting, and I think one thing that really one of the charts that I love to show people is just looking at like the total open interest over the last 4 years. You know, I think especially with on-chain options, we really started to kind of get some traction. You know, back in 2021, but it really just goes to show, like even on centralized exchanges like Binance and Deribit, really we've taken off to a different level over the last 12 months, and I think this is like really really interesting to me, just seeing like the total open interest. And I think now that we're seeing this happen on centralized exchanges, I think it's just a matter of time before people look for on-chain alternatives, and hopefully that's where, you know, protocols like IVX and Panoptic and all of the others as well can hopefully benefit quite a lot from.
No, I definitely agree. And you need diversity. You need to be able to trade on chain, which is where you hold your coins, your like the new. Everyone has most of their funds hopefully on a hardware wallet, but you don't want to bridge to Deribit convert to cash or get your coins and trade it so that you have like two markets. So it's a necessary product to have. On-chain options as way the same way you have on-chain trading, on-chain lending, on-chain spot and futures, so or perps. The same thing has to happen with options. And there's going to be inefficiencies the same way that Binance and Uniswap. There's always a discrepancy and people can trade it and kind of equilibrate the market. Same thing is going to happen with the options world. I don't. It's going to take us maybe a few years to compete with the $40 billion worth of liquidity, but we'll definitely or liquidity on Deribit, but we'll definitely get there on Panoptic. But then you have kind of a good market. Uniswap and Binance go in tandem, but they're extremely successful on both their lanes. We expect the same thing to happen with on-chain options and those that are living on centralized exchanges.
Yeah, absolutely. Absolutely. I think it's usually just a case of like, firstly, we have to kind of, we've got problems. We've got two different problems, I think. We've got problems that are something that are in our control and some things that are not in our control. And I think a lot of the things, especially when it comes to on-chain DeFi that aren't in our control, are things like, the friction with using bridges, or, having like 3 different types of USDC on Arbitrum, or like, some of these other kind of friction points that we often see time and time again, whether it's to do with wallets or whether it's to do with, I don't have enough gas on this chain anymore. And so I think those are kind of problems that have actually been tricky to overcome, especially for derivative protocols in general. I feel like we're finally kind of making some really good progress on that regard. And I'd like to think that over the next 6 to 12 months, that's only going to continue. And I think with abstraction and a whole range of other things, that can be eliminated. And then it comes to like the things that we can control itself. And I think with options, we've had problems with liquidity fragmentation, at times poor UX, difficulty in kind of appreciating the opportunities. And I think one of the great things is like, when you're building protocols that are like built on top of other protocols, like you don't have to like spin up completely new pools or spin up completely new assets. A lot of the stuff is already there. You can use, for example, Uniswap for your benefit there. So I think that's also like really, really interesting. And also like, on our side, like we're trying to create new infrastructure with 0-day options. Like not too many have really tried to bring this to the market, and we know that there's so much demand for this in traditional markets, particularly with retail users. You got to go no further than Wall Street Bets on Reddit, and you can see for yourself the demand. But on the crypto side of things, other than centralized parties like Deribit, we haven't really seen it on chain. And I think there is a market for it, and that's kind of what we're looking at as well. Those are just some of the things that I have to say on your point.
And also just to add, so Deribit has been around for many years. We see here, so the Bitcoin ETF now has options as well. We expect the same thing to happen with the ETF, and if there's a Litecoin ETF, then it's going to be options on it.
Yep.
So I'm trading the IBIT options as well in my brokerage firm, and it's fine. It's one way to get exposure to vol, one way to trade that is kind of capital efficient and easy, and it's fine. I have some money on my brokerage firm, have some money on chain. You just need to have kind of the offering everywhere. And yeah, I'd say that the and maybe you can look the ZODTs on these. You can trade it on the IBIT. So yeah, there's healthy amount of volume actually. It's actually quite surprising. So it's definitely meeting the demand. So those that are only on in traditional finance, they have a brokerage firm. They are trading the IBIT and the Bitcoin ETF options for sure. So I'd expect that it's just a matter of kind of it product needs to be traded. And if you're an options trader, you're product agnostic. So you asked me about my coins. I have no vested interest in meme coin A or B or Pepe or whatnot.
Yeah.
I just trade the vol. I just trade the underlying.
Yep.
Same thing happens with most traders, could be institutional or liquid funds. The true way you trade options is on that pure vol play, and you can be product agnostic. Whether it's an ETF, I'm happy with this. If it's a perpetual option on Panoptic or 0DT on IVX, I'm happy with this as well if the opportunity is good.
Absolutely. One thing that you mentioned there is, I'm not based in the States, so I'm not sure about the exact specific benefits of trading like an option on the ETF itself. Would be interesting to me to learn a little bit more about like why would you do that instead of just trading Bitcoin itself.
So again, the sell side or the way I trade is that I have no idea, and maybe I should maybe put a trade on for that. What I said about the inauguration, but
I
volatility changes, and you
see.
have these spikes. Typically,
Yeah.
it's seen in the derivatives market. It's seen in the CME, which is the futures market.
Yeah.
It's going to be seen in IBIT as well.
Yeah.
I can capitalize on that spike of volatility because I hope it's going to go down. And volatility can only go so high. You don't have COVID crashes every day.
Yeah.
So by the time you reach the top, you hope it goes down. So I'm selling options. I'm selling straddles or strangles, and
Yeah.
these are neutral. So I think the price is going to be range bound. And actually, I have one trade on. It's between, oh, yeah, they have some weird, the IBIT price is hard to convert to BTC. So I don't know what it is, but I sold a single put on the IBIT. It was 20 delta, now it's 14 delta. So
Oh,
meaning
okay.
the price went up, I made money. Vol could contribute to that. So I think it's just kind of one way to have some way to trade the volatility is pretty liquid on the IBIT markets. Again, by the time the traction is on chain as well, we expect the same thing to be as liquid as well.
Yeah, it really makes sense. I'd love to also learn about like how like what do you decide like is a high vol? You know, it's going to be subjective and different to everyone. Like, do you have like specific numbers or specific like reference points that determines, oh, you know what, actually this is getting a bit too high now. It's going to be
Yeah,
different. It's going to be different for
exactly.
you.
The this is again timing tested strategies from the traditional finance world. What people look at, yes, IV is a raw number. Tesla IV maybe 80%,
Mm,
or IBM could be 30%, and S&P could be like 15-20%. It's all relative. And the key point is that, is it high relative to itself? Is Tesla at 80% towards its high range over the past year or low range over the past year? And this is your entry point. The Tesla, IBM, S&P 500, the same trade could be built if it's high relative to itself. And it's there's IV percentile and IV rank. We do show them on the Panoptic website as well. But when the IV percentile is high, it means it's been high relative to itself. It's a good time to sell options. If the IV percentile is low, meaning it's the lowest it's been over the past few months or past year, then you expect maybe the vol to pick up. It's always cyclical on the vol space, and you can buy options. So that is definitely the signal. High IV related to itself, you sell options. Low IV, you don't sell or buy options.
I think that's a pretty good reference point for some of you guys who are listening who might be new to options. Have a look at like the IV charts and kind of have a look and see when you can spot IV high in reference to itself, high points and also low points, and map that out onto option pricing charts and see like what happens. See if you know if you were to enter positions, what would happen? Would you make money? Would you lose money? I think it's a really fun way to kind of learn and get some exposure, because I know a lot of you are still kind of getting up to ropes with the speed of kind of what options are and how to use them specifically to your advantage. Definitely play around with that sort of stuff. I think that's great. And you mentioned as well that you have some of this analysis on the Panoptic web app as well, right?
Yes, that's correct. And this is also what I use as an entry point.
Yeah.
And if you do it, you're flying blind. You need to have some level of unless you know the market so well that you know that 65% IV is high for Bitcoin. You need to have this number kind of in front of you.
And maybe we can show this to the users as well right now. I can share my screen, or if you want to
Oh,
share your screen, I think it'd be great.
yeah, for sure, for sure. Let me share my screen.
Yeah.
And okay, I'm gonna load. So we do options on all assets that are tradable on Uniswap. Oh, actually, just before, I'm going to go to the Volmex index for the Bitcoin volatility, and this is a little bit also like, this is the Bitcoin volatility. Volmex is doing this aggregation from the Durbit, but also different sources. 65, which is what it is now at thereabouts, is kind of average. But as I said, there's always these huge moves either to the downside or some
Mm,
spiking that happens. And this is when you capitalize on this. The Volmex index uses Deribit, and there's billions of dollars backing this. So if it does move, that means that there's a huge shift. And that I don't know what that drop is, but this was after the inauguration. Like, this is pent up demand. Oh my God, what's going to happen? Trump gets elected, the vol decreases. So that's, regardless of how we want to see it, options become cheap right after the event is done. And I would expect a similar drop to happen after the inauguration and a week, or maybe if there's one big uh, if there's one big event or one big law or executive order that is beneficial or detrimental, you don't know where the price is going to go, but the next day will be much lower vol, which is what we've seen here. And that's kind of how you trigger. And I would say this might have been kind of 1% IV percentile, because it never spends any time there. Very good time to buy. There is some spikes, I don't know, in November, maybe some announcements. We'll see, but that's also another way to trade. The IV percentile gives you this snapshot. We can see what ETH looks like. Similar drop, but now it's also kind of moving back and forth. That November time was also kind of higher. Now it's lower. So vol has its own behavior. It has its own trade construction, and you cannot just say I'm going to buy options every day. You just have to also get this vol into as an input to your decision making. So yeah, Volmex pushes this. Maybe they'll show the Panoptic one as well.
Yeah,
And
that would be
again,
great.
I'm going to show the main dashboard, but we have ETH USDC here. The IV on Panoptic is 62%. We have ETH BTC market. We can trade the ratio of ETH BTC. Remember, we're based on Uniswap. The largest Uniswap pool is ETH BTC.
Mm.
And you can trade. This is 30% IV, but because the two assets are so correlated, so that it's actually less risky to trade the ratio than trade either one separately. But we have Cult. It has 168% IV.
168.
This
Oh
is
my
high.
goodness.
And then grab II coin. So even Eigen, the Eigen token, it's kind of new volatile. It's correlated with ETH, but to a lesser extent than BTC itself. So it's 60% IV in this space. So we do show the IV on the main app, and I'm going to go to ETH USDC. We show the IV percentile as
Oh,
well.
the IV for ETH Eigen was less than USDC ETH.
Yes, exactly. But remember, these are correlated.
Yeah,
So
yeah, yeah.
people sell all their coin. I don't know why people sell out in tandem, but on the way down, everybody sells. I'm sure auto sell everything. So these prices will be much more correlated.
Yeah.
ETH goes up, you sell some profits by Eigen goes up as well. So it's one level of correlation, but it's actually 60% is fun to trade, and it's actually not going to be a very very boring pair. Definitely like ETH BTC, but on the markets page of say the ETH USDC, we do show 62, but the IV percentile is 20%. Again, we I think we're using it over the past 3 months, so it might have lost the spike or whatever happened at the inauguration.
Mm.
But we also show the IV percentile. So maybe I'll zoom in. But yeah, the entry point for any trade for an options trader is definitely the IV percentile. One thing that's interesting is that in Panoptic, we also show the distribution of liquidity that's been sold. So Panoptic is integrated into Uniswap. You sell an option, the liquidity is moved into the Uniswap pool, and it's going to create a range. We have the Panoptic liquidity actually fairly well narrowed down around the current price. If you look at the Uniswap liquidity as well, so Panoptic
Mm.
owns a tiny sliver of it. This is much wider, and the key point is they have these liquidity chunks that are kind of out of range. And this is the Uniswap side. We are built into it, but this is likely someone that is
Putting
selling
a
a
limit
covered
order.
call.
Yeah.
It's a covered call like trade between 4,000 and 4,100. There's tens of millions of dollars in that covered call.
Yeah.
There's another one at 45 here. So just people have in the Uniswap world figured out, okay, you can do single-sided liquidity. It's like a covered call, and you can earn fees. If this liquidity were to be in Panoptic, this would be a call option, or maybe a put option, but a call option being sold out of the money, another call option being sold out of money. So you or your listeners could say, "No, I want to buy this call option." So you could buy the 4,000 strike call that would be kind of interacting with that chunk of liquidity. And because there's a lot of liquidity, you could buy quite a lot of it and not impact the market as much. And that's kind of the point. In the Uniswap world, we feel like liquidity is badly deployed. In the Panoptic world, it's quite narrowed around the current price.
Very nice, very nice. I love the dashboards. They're very clean and they're really easy to appreciate, like what's going on as well.
Yeah, we are creating something that's very retail focused, even though options historically have been reserved for the funds and banks and large institutions. They look at a row of numbers and they're happy with it. From the dashboards that we produce and also the trading interface, it's a lot more user friendly and kind of retail focused. So we do have still a options chain that exists, and you can see a similar setup than most options trades. So we have the strikes, but also the delta of that position, the open interest. We have something that looks like the implied volatility smile that exists, but we still have this. And again, if say you want to buy the 4,000 call, you can still do it on Panoptic, and you click buy. We may go back to the dashboard, but it's going to bring you to the actual trading interface. And when I say it's different, you see the payoff of that call
No, that's
option.
nice.
It's not going to be a number, but you see exactly where the break-even points are if you make money as the price goes up, and you can actually drag around and try different options. So again, the further away you are, the less you pay. So the whole thing is also geared towards maybe uh, giving more information than just a number on the sheet. And here, this is the call option that you buy. If you are non-directional, you can actually say, I'm going to buy a put as well, and have this kind of
Very nice.
bi-directional profits. If it goes below, I don't know, 2,400 and above 4,200, I make a lot of money. And if the price is very violently moving, you may be paying less than what is that. This is estimation. So at least the retail side will not see put and call as a total number, but rather see this as the payoff of your trade.
Yeah, I love that. It looks really really great. It looks really 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 great. Um, going back to the dashboard, you have like a variety of different assets that you can trade. But let's say if there's a new asset that comes out, how can we trade those?
Yeah, exactly. So currently, we have the most TVL in the ETH/USDC pool, and this is also where we focus our attention. We have points running and also incentive program for depositors. But people have been creating. Someone created the Eigen market, the Pepe market. This is the ticker Bitcoin cow, which is a very new the cow swap
Yep.
token.
Yep.
It's very permissionless. Some people created again Badger BTC. They did
Oh
not
yeah.
deposit anything. So if you trade, you'll have to be the first one to deposit. But all of these have been kind of created. Aave, Link, the smart contracts have been deployed. You don't have to pay for the smart contract yourself if you want to trade those. So that's kind of very, very easy to deploy new ones. And if you look at the list of undeployed pools, you could go and create the Shiba pool if you want, the Maker, Athena token. All of this could be easily created in one click.
And how much liquidity do we really need in these pools to create a semi-efficient market?
Yeah, exactly. So the we're based on Uniswap, and existing liquidity providers like the Eigen token, for instance, and we can go to that one.
Yeah.
This one is interesting. The Uniswap liquidity is fairly healthy. You have $13 million worth of liquidity in Uniswap,
Yeah.
meaning that trades get routed to that pool. People can swap 200K and not impact the price too much. It's actually a very, very liquid and mature pool on the Uniswap side. You can be an options trader and sell on top of that liquidity. So the liquidity for the sell side is just, is there enough in the Uniswap pool? Does that get enough volume and fees? If so, yes, I can sell option, which is going to be kind of that moving liquidity into Uniswap.
Hmm.
So the first criteria is that Uniswap pool getting volume and traction? If so, I can be a seller and permissionally sell. So there's not much liquidity here, but someone sold um so a call option and a put option, and people can buy it. And there is a little bit, a few $100s worth of open interest, but on the sell side, there's no limit because this would be a good pool. So if you either have a bunch of Eigen tokens that you have in your wallet that do nothing, you can sell a covered call against it, or you can also sell a put option if you think the price is going to go up, and if it doesn't go up, you buy the Eigen token. This is kind of cash secured put. So the whole ecosystem, at least that way that we see it, is that If you're a token holder, whether it's meme coin or any product, and you have nothing to do with your tokens, you can either deposit them in the Uniswap, in the Panoptic pool, and currently the Eigen token holders are earning almost 11% APY on the deposits. So you deposit into the Eigen market in Panoptic. These Eigen tokens can be borrowed by traders, and that borrowing activity generates yield to the depositor. So you have 10% on the Eigen side, about 6% on the ETH side, and you can actually earn just by lending your tokens. So this is passive liquidity providing. You can actually be a lender to market makers. You need to have several $1 million worth of net worth to do this in TradFi. Or if you want to lend to Wintermute, you also have to have a billion.
Yeah,
Here, you can be a lender at any scale you want and be lending to traders and market makers.
very, very
So
interesting.
it's a
Very,
very
very,
flywheel type of effect.
yeah.
Some liquidity attracts buying, some buying attracts deposits, more deposits attract more liquidity. So it's actually very, very flywheel. So we've hit a good inflection point with the ETH pool. We have $1 million worth of liquidity, but most of that liquidity is active and in play in a sense. So about 40% utilization, meaning that 40% of the funds have been borrowed on the USDC side and about 17% of the ETH side. So we want to be between kind of 10 and 50%, but that means that it's active. People aren't just depositing money. And in that case, you earn 25% APY on USDC, 18% on your ETH if you are a depositor in the ETH USDC pool.
I mean, that's some pretty strong yields that you have on USDC as well.
So the risk reward curve, if you want, is up for the taking. Currently, if you want to lend ETH or you want to generate yield on your ETH, you can go lend it on Aave maybe and get 2%. Or you can
Yeah,
go Eigenlayer or Stick in Protocol, you get 2.5%, 3%. The floor is very, very low, and no one wants to short ETH, right? I think it's going to go up, so there's not much you can do. So borrowing demand is very low. In reality, options trading, even perps, all of this is way higher on the risk spectrum, and that means the yields will be higher as well. So it's 17% on ETH, and it's real yield. People are paying to borrow ETH to sell calls, to maybe buy calls as well. It's the call side. This is the frothiness. If you think the price is going to go up, the yields on ETH will go up. So that's kind of a good way to also deposit ETH and get the upside of the yield on that side. So if you do it on ETH USDC, it's a fairly stable market. Shouldn't be at risk. If you do it on the ETH Pepe pool or any meme coin of the day, the yields may be 50%, but you can lose all of it because it crashes. So
yeah,
you're holding some side. So at the end of the day, it's all where you want to be on the risk reward spectrum. Now everybody's locked at the lowest step of the ladder on the ETH side because there's not much to do with it. We open up that kind of higher yield for options trading. Again, you want to get extremely high yields, you can lend your tokens to Pepe traders. I don't know if Pepe is almost kind of old news now, but any new meme coin, and then that maybe is a good idea or maybe not because the token can crash. But that's kind of where you want to be. Maybe if you want to get 20%, you have to be okay with some potential of loss type of thing.
yeah, definitely. And I think this is like one of the things that I really like about derivatives in general is that like no matter what kind of derivative you use, there are ways that you can earn really interesting real yield. You know, that can be from selling options, as we've kind of just discussed, but also like if you're using perpetual markets as well, funding rates can be really really high, and you can arbitrage them. And I think 20% is. I think I've seen that many, many times, across the board when it comes to some of these assets as well. I think that's like one of the great things about derivatives in general, like the uniqueness that they offer can be put in the form of instruments that can give really, really good yields actually.
And those traders, they maybe they're okay paying 20% on their
Yeah.
loans because they make 100% or I don't know 80%. So at the end of the day, it's all about the risk profile. And if you lend to someone on Aave, yes, they can borrow the funds, but then go and buy a mansion in the real world somewhere, and you cannot repossess that if they are underwater.
Yeah.
So you have to have higher collateral ratios. If you liquidate someone, like someone can be stuck with bad debt. In the Panoptic world and the derivatives world, it's like an ecosystem, a bubble. If you borrow a lot of ETH, we don't allow you to withdraw. You can only deploy it in Uniswap. You can only trade within this ecosystem.
Yeah.
And if you are underwater, it's easy to get the funds back because you don't have to sell someone's house. You just have to close that position that they've opened. So in that case, that's why we allow under collateralized lending. The loan to value is 20%. You need to have, or no, 500%. You can have 5x your collateral in loans,
Yeah.
because if it goes down, we can seize the funds back. And it's only when there's a 20% drawdown that you have kind of the max loss. So it's actually, this is where I think a lot of it will go. There's going to be an integration between lending protocols, derivatives protocol, in that case, Uniswap as well as a spot trading venue, but also kind of Panoptic as an option site. So you do get a lot of gains by combining liquidity, combining collateral, kind of netting one against one another, and having this kind of be an ecosystem that's rich as opposed to having several disconnected ones.
Very, very interesting. Very, very interesting. I guess just in the interest of time as well, like what can users like expect to see next from Panoptic as well? I'm sure some of them watching will definitely play around with the application tonight or on the weekend. But we'd love to know like what what's coming next as well.
Yeah, exactly. So we're on ETH mainnet, and we made a point of launching on mainnet first. Gas is high, I understand.
Yeah.
It's actually slow, but it's where the liquidity is. And we create options that are not zero DTEs, but rather monthly. So
Hmm.
if you trade once every few weeks, you can actually shoulder the gas cost. But we hear a lot of people also wanted to also go on L2s, and that's on the roadmap. So we'll launch on L1s, we'll grow the TVL, we'll go on all the layer twos that have a Uniswap kind of smart contracts, could be V4 or V3. We'll go on Base, Arbitrum, Unichain, Optimism, Polygon, all of them. So probably at the end of Q1 we'll be launching on all the pools. We do want to showcase ETH mainnet first, but we'll be able to go on all the pools. So that's kind of in the pipeline. At the same time, we have the point system where we've been kind of tabulating them. We'll be releasing the leaderboard showing the different campaigns. Currently, there's 3 markets that earn points. The we call them pips, Panoptic incentive points. The ETH USDC, ETH BTC, and Cult ETH. We had kind of a small competition. So if you are participating to those pools, you earn points. And also, we're looking to creating a passive user interface focused for passive investors. Options are definitely not for everyone, and we don't want to have people kind of trade options without having all the risks management that they need. So you can still be a lender, as I mentioned earlier. So we'll have a streamlined interface. It's called the Grow app, but just lending to market makers, but have this all be in a single interface, similar to all the yield interfaces you see. But now you say, I want to lend at 25% or 5%, and you can kind of go into different markets. So that's going to be also coming on the roadmap. But yeah, we have an ambitious roadmap for sure. But the key point is that we want to be able to service options and options trader the same way that Uniswap serviced, again, token launchers and token traders. We want to be everywhere we can, and have the people be the market makers and not have to do backdoor, like back channel deals with market makers to kind of see liquidity and kind of I mean, have this be at the mercy of the market makers. This is all very, very permissionless and democratic. Everyone can be an options trader here.
Yeah, I mean, it really makes sense. I think I'm pretty excited to see like where the future of options in general goes, and I think now we're seeing like this new generation of option protocols coming to life, and I think it's pretty exciting. And I think they're only going to get better from here, right? I think across the board, there's lots of things that we can all improve on. And yeah, sure, that takes a bit of time, but I think now I'm actually seeing these improvements, and I think that's great.
Exactly. And then I've been seeing it for the past 2.5 years. The protocol was working, the audits, we did extremely comprehensive audits. But then I was so excited because of the launch. I was able to trade. We did a trading competition as well in stealth mode and on base with a Brett meme coin.
Oh yeah.
Just to see, and then this was so fun. I'm so excited to having finally been launched, and you guys can use it. But yeah, it's a new to trade. It's a different way to trade. It's not for everyone, but we want to create content. You guys also are doing a lot of work, but we want to create content tutorial this type of podcasts are definitely useful, but I want to have kind of, I mean, it's all public. You can also look at my own trades. I can look at everybody's trade. You can actually see how they're performing. Maybe we'll go over like the rationale between them as myself. But yeah, at the end of the day, it's like perps before perps. Nobody understood it, or AMMs before AMMs, but it has a use case. It has a clear kind of demand, and whether it's institutional or retail, it's just kind of now, yeah, as you say, finally we can do it. But yeah, couldn't be more excited to finally have this be launched and available to everyone.
No, I love that. I love that, and just wanted to say to you as well, like, thank you so much for coming on the show today. I think I've seen like lots of comments as well from the viewers as well. There's like hundreds and hundreds of people who are tuned into this show. So yeah, shout out to everyone who's spending their Friday with us. I think what you can do is you can go to the Panoptic app and play around with the application. Get a feel for how some of their products work. I think we've gone through a lot of them today. And I think that's also another great point that you mentioned about kind of the ongoing education that both of us will be doing from our side at IVX, but also from your side at Panoptic. So I think definitely stay tuned for all of that. You'll learn a lot. You'll learn a thing or two for sure. So yeah, stay tuned for that. Any last comments from your side at all before we wrap things up?
No, that's it. Go try Panoptic. Go immerse yourself in the beautiful world of options.
Yes, exactly. That's what we tell them all. Always immerse yourself in the beautiful world of options. There's so many different opportunities out there with you. So yeah, make sure you stay tuned for all of the updates that we have. We posted some teasers earlier today as well. We'll have something very interesting for all of you guys next week as well. So next week will be a fun week on our side of things. But in the interim and on the weekend, have some fun with Panoptic. And we'll be back again next week. So stay tuned for that. I appreciate all of you for tuning in this Friday. And yeah, have a lovely weekend. And we'll see you next week.